Time for the Trader Blitz. Hibbett Sports and Foot Locker are sinking following earnings. Hibbett missing top and bottom line estimates, cutting full year guidance. Foot Locker, meantime, posting a beat, but light same-store sales. Weiss, what do you say?
Look, those are some ugly numbers. Hibbett's been in a downtrend for about 5 years, so I don't know why you want to take a chance on that. To me, this points out how online is growing. Nike product online. The return policy is phenomenal after 30 days. Why go to Foot Locker? So if you know your size, you know what you want, they've got a bigger offering. I think that's where it's continued to go, and that playing these are fraught with risks still.
All right. Gap falling after a decline in comp store sales, while Splunk is soaring after strong Q2 report. Jim.
Gap's been painful for years. I mean, I don't know how anybody gets sucked into this, and I'm sorry if you did. I'm not trying to pour salt in your wounds, but I don't think I would ever touch this. They keep sucking people in with a good earnings report, and then they dash hopes for 2 quarters in a row. Just stay away from it. It's not worth it. Other places to make money, like Splunk, oh my goodness. I mean, look at this stock. The chart was on a tear before this, and obviously they had a great quarter. Now, when I see a response like this, what I look for is who else might be affected. Next week, you've got Salesforce reporting earnings. It's not the same type of software, but it is still business software. I think this bodes well for Salesforce's earnings next week.
All right, materials, best performing sector today, Erin.
Yeah, I think there's 3 reasons why I'm bullish the materials sector here and now. First, when you look at global metals and mining demand, it's still very strong. Second, I think that the dollar appreciation is coming to at least a shorter-term localized peak, and we'll see some dollar stabilization from here. That stabilization is bullish for the commodity sector. And then thirdly, China reopening the stimulus tap, particularly towards local infrastructure investment. That also is bullish for the material sector, so I'm not surprised that this is one of the best performing sectors of the day.
All right, semis on fire today with Intel specifically rising more than 37% over the past year. Ellen, you own it.
We like Intel a lot. Intel has a dominant share in servers, which powers cloud computing. That business grew over 25% for them last quarter. Right now, people are worried about manufacturing delay. I've been following semiconductors for over 20 years. There is always a manufacturing delay, and you know what? They always get it worked out. You can get one of the best semiconductor companies for 11 times earnings. I'm in.
You agree? Where do you stand on semis?
You know, it's to me, Intel's just one of those, and I know Jim likes it a lot, just permanent potential. You know, like an athlete, you draft number 1 and it sits on the bench for 5 years. Intel goes up and down, gross margins up, net profit margins up, down. I just stay away from it because I just don't see ever really getting sustained return on that at this point.
Jim is chuckling at you.
I'm actually chuckling with him because certainly the last few months it has felt exactly like that. But I think if you take a look at
2 decades.
No, I think if you take a look at the last 3 years in particular, you see there are moments like we're in right now where it sputters, whether it's because of the 10 nanometer versus 13 nanometer technology or the loss of Kazanich. But then it kind of gains its mojo again, and I think it's poised for that. I think you have to look at the earnings, and in each of the last 2 quarters they've beat and raised. So whatever this nanometer issue is, it's really not hurting profits. I think you just got to hang in there through these periods where, to use your terminology, it's sitting on the bench, and it is.
I think some of that negatives are in the price right now, and that's why I think the risk reward is definitely in your favor.
But you see, I also wonder who's the incremental buyer other than a trader coming along. This has been the story over and over. You say 3 years, I'm saying 2 decades, and the stock has these stops and starts. So what you're saying, it's in the stock. Everybody knows that. It's like, as I point out, it's like those old Civil War movies. You line up 5 rows, right? Those 5 rows have been shot. Who's the next row to come along and buy this? Right?
You know, I actually don't disagree. I'm not going to come back at you. I'm just going to say, you know, having owned this now for 3 years, there are a lot of moments like this where I'm listening to you and I'm agreeing with you over the last couple of months. But then, lo and behold, the next 6 to 12 months, it performs well. So, I mean, just the historical pattern is on my side. Let's talk in 6 months.
In 3 years, by the way, the stock is up more than 80%. So
which, to be fair to Steve, because I know what you're going to say, AMD is up, 300%, or NVIDIA is up, but still, it's not a bad return. It's not a bad return.
I'd rather own Apple.
Okay.
I do own Apple. Thank you.
You're welcome.